Cameron Halliday, welcome to the podcast.
Thanks for having me. It's great to be here.
So very cool to hear you're the founder, CEO of a company called Mantle, and Mantle has a unique carbon capture technology. You're helping to make net zero possible. Tell us more about that.
Yeah, so we're developing a molten salt-based carbon capture technology that makes it possible to capture CO2 from heavy industrial emitters very efficiently. And doing carbon capture efficiently is how we drive down cost. And driving down the cost of carbon capture is a requirement for meeting net zero. And we can apply our technology to lots of different industries and sectors to enable them to hit their very ambitious net zero targets.
Awesome. So let's double click on industrial emitters. That's a broad scope. Tell us about who some of those folks are. You don't have to give specific names if you don't want to, but I'm just curious, like who's the low hanging fruit in that regard?
Yeah, so one of carbon capture's biggest attractions is it can be applied to a lot of different sectors. This can span chemical, cement, steel, hydrogen, power, pulp and paper, the lot. It covers the vast majority of industries, or almost all of industry's emissions, and the vast majority of the world's emissions today. And so each of those industries have unique flavors, not just in terms of how you apply a carbon capture technology, but also they're just very different sectors. They're different in nature. And so we are looking for sites we can apply technology at and come in with a low cost, but also with a really strong competitive advantage versus alternatives. That alternative might be different carbon capture technologies, but it might be other pathways that industry could decarbonize. And so a focus on industries that are really hard to abate, industries that have few alternatives is a nice way to start and a nice beachhead to enter into. But also we face this challenge as a startup where a lot of those industries are huge and they're operating sites that are gigantic. And so a full scale deployment, even at a single site, can run in the hundreds of millions of dollars. You're approaching billions of dollars of capital deployed to build a project. And that is nerve wracking as a startup. I mean, it's nerve wracking as a big company, but it's certainly nerve wracking as a startup. So as a company, as Mantle with our product strategy, we have tried to identify sites and opportunities where we can hit commercial scale faster than that, sooner than that, with smaller projects, but still projects that are meaningful for industry.
Yeah, that makes sense. And of course, if you know industrial sites like I do, they tend to not like new and high risk things coming to
Those
their
are not words you should mention.
That's right. So I find there's a little bit of an odds there. And we as investment bankers, we like to kind of sit in the middle of that. Working with startups, venture capitalists love new, novel, proprietary tech. When it comes to the world of project finance and infrastructure, they tend to not like new, novel, proprietary tech. So kind of bringing those two worlds together, I think is a huge goal and need of net zero. Your reaction to that.
Yeah, absolutely. And we are sitting right at that intersection right now. As we saw this, we spun this tech out of MIT and have made a lot of progress today. And now we're starting to get projects in the pipeline that will be deployed in industry, starting to move away from this being science towards this being engineering and a business of execution of projects. And that transition is hard. It's hard as a company. It's hard. It involves growth from everyone in the company, from the team. The R&D team evolves into an engineering team, evolves into a commissioning and execution team. The executive team has to evolve and change how they tell the story. And we keep that very front of mind and that was sort of from the beginning, even before we started the company. So this was my PhD work at MIT, and that was very much with the science hat on. But before we founded the company, we recognized that industry is not looking for innovative and high risk. They're looking for something they can be assured will work when we go and build it. And so a lot of our focus as a company has been, how do we make this look very normal for industry? How do we use off the shelf components to build a system that looks just very familiar to them? And it's not just the site, it's the project financiers, it's everyone involved in a project. Let's make this look and feel like how industry operates today.
Yeah, for sure. You reminded me of Elon a little bit there when you said the word hard, right? Because it's hard to do that, right? Like he says, it's hard to scale. It's infinitely harder to scale manufacturing than it is to build the first prototype. And I think that word hard, when it comes to hard tech, is really the thing that we've all got to figure out because we're trying to solve a physical problem here. So hats off to you. Tell us, can you double click on a couple of those smaller projects where you're seeing there could be opportunities to do it at a scale that's manageable?
Yeah. It, so the big attractions for carbon capture are those big industries I mentioned. We have enjoyed sort of double clicking into industrial heat and as a bucket that almost excludes cement and steel, but the bucket of other industrial heat. So I would call things like specific chemical manufacturing processes, petrochemicals, glass, ceramics. There's just a whole bunch of smaller industries that typically operate at slightly smaller scales where we can get to commercial and have an impact at the site level quite fast. Pulp and paper is another one that's really interesting for us. There's an angle there around carbon removal, but not just carbon abatement, because a lot of the emissions from a pulp and paper mill are biogenic. And they have a lot of different assets on a site. There's traditional like steam boilers. There's a pathway to decarbonizing them other ways. You can build an electric boiler. That's a technology we can do today. There are really hard to electrify things there too, like a lime kiln, the basis of a cement plant. And so we're excited about working with a pulp and paper company to sort of scale up across different applications with the same partner that's committed to the fundamental technology. And so but there's a technical lens to this too, which is like, which is the easiest application technically? Because if we can pull as much risk out of the tech, that makes everyone feel much better. So the commercial, like the pull from industry is important, but also there's a little bit of let's build the easiest thing to build because that's going to be the most financeable thing initially. And for us, that's basically a steam boiler. Let's build a boiler and it typically this natural gas fired, but it could be fired by a variety of things that generates steam, typically for an industrial site, steam being the way in which heat is moved basically throughout the economy or throughout industry. Thousands and thousands of steam boilers around the US and the world. They vary in size from little ones to pretty big, like multi-hundred megawatt boilers. And so our technology is really well suited to it too. We are efficient because we recover energy. And the easiest form to recover that energy is in the form of steam. And so that is our initial demonstration project that's current in procurement and in build. We have a next iteration of that before we go to where we ultimately want to end up, which is an integrated solution for all of these different industries. And the stepping stone is what we call a paired system. So what we're building initially is essentially a natural gas-fired boiler that captures all of its own CO2 emissions. But it has the capacity to capture more than just its own emissions. And so one step towards broadening our opportunity base is to pair it with some asset next door. So we build a boiler, it captures its own CO2, and then we funnel in CO2 from a neighboring asset, capture that CO2 as well. And we get a huge amount of freedom there because we can cover flue gas from a lot of different emitters. That could be a cement plant, a steel plant, a chemical plant. There can be a lot of different emitters. And we just need to build the boiler that does the capture and regeneration efficiently, but also produces a ton of steam that's useful at those sites.
No, that's super awesome. And it makes sense because these sites have a lot of steam. And if you're able to capture your own CO2, then you can capture their CO2 as well. And I imagine that flue gas CO2 concentration is fairly high, definitely higher than DAC, direct
Yeah.
air capture, which I think is getting a lot of publicity these days. But I imagine the concentration of CO2 in that flue gas is probably a lot better than the air, I would guess.
Yes. Yeah, it tends to be. I would say like the most are between 4 and 15%. There's a number of industries that you're going down to like 1% or even a little bit less than 1%, aluminum being a good example. And there are industries where you're actually quite a lot higher. You're maybe in the 20 or 30%. And that is our range. And we handle that range very well. We can do 1% pretty effectively. And that is something that our other carbon capture technology really struggles with. But we can also do 30%.
No,
It
that's
tends to
great.
get, yeah, it tends to get easier with higher concentrations.
Yeah, so huge applicability. And do you know if the CO2 when you're capturing it, I guess it would depend on how it's used, but are you qualifying for, say, in the US, like the 45Q credit or some of the other incentives that have been brought to bear?
Yeah, so 45Q is a huge motivator. It's in the US. In other jurisdictions, there are other mechanisms, but in the US, this is essentially a carrot. 45Q is $85 a ton for CO2 captured and stored. And if you can come in under $85 a ton, you have a financeable project. And if you can come in a lot under $85 a ton, you have a very attractive return profile for that project. And so that has gotten a lot of industry very, very excited about finding a way to come in under 85. Now, 85 is quite hard. I would say 85 is very hard for a lot of the existing technology. And so what we're able to do at Mantle is cut that cost to the point where we open up a swathe of opportunities that wouldn't have been financeable before and now are. And the ones that were financeable before now have much better, more attractive return profiles.
That's awesome. And of course, I'm sure that's what investors in your company are thinking, opening up this financeable returns. We're all numbers guys, so we love that. Tell us about your Series A and how it's going and sort of what you saw in the market last year. I have a feeling of what you're going to say, even though we haven't talked about it because I was in the market too. But yeah, would love to hear 2023 and what you're looking for in 2024 as far as financing.
Yeah, so we're raising our Series A right now. Maybe just a little bit of history too. So we did a seed round. The Engine led our seed round. The Engine's a Boston-based VC, and we're part of the Breakthrough Energy Fellows programs. We got some non-dilutive funding from Breakthrough Energy to support our early stage climate tech, to get this out of a lab and towards industry. And that both of those partners have been instrumental in our success to date. And now we're going out and raising a Series A, essentially to build this demonstration unit. It's a 1 megawatt thermal natural gas fired boiler that captures its own emissions, about 5 tons of CO2 a day. It's going to be at a partner's site. One of the reasons we selected this partner's site is they consume CO2 as a feedstock, so we can use that CO2 on site. They're currently buying it from the market. We can sort of give it back to them, and also give them the steam for the site. And so raising the Series A to build that project, as well as build out a pipeline of commercial scale units, a pipeline that is looking increasingly full. So very excited about that. But that demonstration is really the big milestone for the Series A to really eliminate the technical risk and make the finances of the commercial projects feel comfortable in the performance claims that we're making.
Sure. And how has the A been going so far?
Yes, answering your question. It's an interesting environment. It is not like it was when we raised the seed. I'll say that. But we've made a lot of progress. And so we're very optimistic, and we're building out a strong syndicate of investors that can really help us scale. As is sort of clear, or we're going to need a lot of capital to get to the scales that have a real impact for industry, because those scales are terrifyingly large. And so we need a lot of capital. We need to share our vision and inspire investors, partners, our team, and everyone to hit that vision. And we believe in ourselves. We believe we can do it, but it is a difficult environment.
And no doubt about it. 23 was a tough year. I'll agree with you wholeheartedly. It's a tough year in venture, but we are seeing a lot of activity in the infrastructure world, and funds are getting freed up. One thing we saw is a big move from sort of boring risk-free infrastructure, which maybe you think of as like wind, solar, giant projects like that are simple tech, moving towards the level of energy transition. And what we're seeing is LPs are now creating those funds, putting money into those funds so GPs have energy transition type funds that are higher return, higher risk profile. And we think that's great for companies like you guys moving
Yeah,
forward. So
it is. And a lot of our conversations are that blended sort of, or new and creative sort of capital that is trying to bridge that chasm that you mentioned before between VC and traditional infrastructure. And that is exactly where we are and where we're heading. Some of that will be our Series B, but it's looking like some of that could be our Series A, as we try and find a pathway from exactly what we've been discussing, from this sort of shipping container size system in the lab to a double-decker bus size demonstration to a multi-story building commercial scale unit.
absolutely. And are you guys based over in the UK?
No, we're based in Boston. I'm from the UK. My accent will give me away. But I came here about 6 years ago to do the PhD and MBA at MIT, and then stuck around.
Awesome. Boston, a great place to be, of course, for raising capital, maybe second only to Silicon Valley, although, you can
Boston,
probably debate it.
yeah, Boston's energy ecosystem is becoming very deep and strong. It has proven to be a great place, not only for investors, but also growing the team and being around a lot of other startups and founders going through the same journey has been really valuable.
No, that's great to hear it. It's been super cool having you on, Cameron. I mean, this is exactly the kind of company that we want to hear is there still room in your A round? Can investors reach out and get in touch?
Yeah, please reach out. As of now, there is still room, but you got to be quick.
And yeah, I can imagine there's not a lot of companies I think that are there that can do what you're talking about at a good price point, which I think is huge. And of course, 45Q is a big benefit. And I did want to touch on one more thing before we go that we talked about. So you don't have to do carbon capture and storage, which I think is an area that a lot of people miss. Can you talk about the optionality around once you've captured sort of what you do with the CO2?
Yeah, this is a great question. And it's, how do I say this? It's a question that's top of mind for not just the projects, the partners, but also investors and everyone. It's an ecosystem question. And so we are the capturer in this step. You then need to do something with all the CO2. But it is worth mentioning that the capture tends to be the most expensive part. And of the 85, like transport and storage, if we go the storage route, can be like it varies. And in the early days, it will be high because a lot of the infrastructure isn't built. But some of that infrastructure has been built. So you can hit cost points in the, let's say, $10 to $20 a ton range today. That's not true for every site, but for many sites, that's viable. And that leaves a big margin for the capturer. But there is this other opportunity to use the CO2 and potentially sell the CO2 to a utilizer. And that expands your top line revenue. So on top of 45Q, now you have additional revenue from a utilizer. Now it's worth mentioning that 45Q is $85 a ton for storage for sequestration, but it's $60 a ton for utilization. So that utilizer needs to not only pay you the 25 to get you back up, or adjust for the cost of storage and transport. So we'll see, like it basically it depends on what's the willingness to pay of a utilizer. And you can use this CO2 for like anything that contains carbon. You can like use CO2 to make. So that's fuels, chemicals, a lot of like some building materials. The big focus for the ecosystem right now is things like SAF, sustainable aviation fuel, potentially different shipping fuels like methanol. You can make polymers and plastics. You can make solvents, and you can make pretty much anything that chemistry makes that is currently made with fossil fuels. You can use CO2 to make them in a more sustainable way. And that industry is emerging. It typically requires a lot of low cost energy to make sense. But as that becomes more abundant, and especially as it becomes abundant in specific geographies, this opportunity becomes really exciting and a way to make carbon capture. Carbon capture in the past has been very cost centric. It's how do you make it cheaper? How do you cut costs? But it's often seen as a cost for the industry. But if you can find a utilizer that's willing to pay for it, that dynamic changes. And that's very exciting.
No, super exciting. And we're seeing these SAF projects, SAF spring up all over the United States. So that's positive to hear. And also with carbon capture and storage, we get a lot of pushback around the class 6 permit that's required in the US. So that's why I wanted to point it out that you guys can capture and then it can be utilized and you have that optionality. And I think it's smart that you're not betting on one pathway, that you're doing the capture and then you've got optionality on the back end.
Yeah, absolutely. Those class 6 wells have proven a little painful to permit, but that's a little bit, in my view, that's been just a little bit of teething problems with getting this industry off the ground. That is largely been because a lot of pressure has been put on the federal government, the EPA, to approve these permits. And it's not something that's been done that much before. And so there's only been a couple permits approved. But as states have gotten what's called primacy, the ability to do this themselves, that timeline has shrunk considerably. And more states are getting that approval. Louisiana just received it, and about a third of the outstanding permits reside in Louisiana. And that's a huge hub for emissions as well as favorable geology to store. So there's definitely a long-term pathway there, but it has proven to be the rate limiting step in deployment to date. Utilization changes that. One of the features of utilization, though, that's interesting is utilization makes sense where energy is low cost. And it's often easier to move the CO2 to the place where energy is low cost than vice versa. So a lot of like SAF is basically you combine hydrogen and CO2 to make fuel, hydrogen being very energy intensive, and hydrogen being very hard to move. It's much easier to move CO2 than hydrogen. So you might as well move the CO2 to the hydrogen. So you still need transport typically, unless you're conveniently located where there's lots of hydrogen and you're capturing that CO2.
Yeah, that absolutely makes sense. So It's super cool, Cameron. We wish you the best. We really think you've got a great idea here. Of course, nothing we say is investment advice, but the reality is, I think this is a technology that is hugely needed in the marketplace. So we're very, very happy to have talked to you, and we wish you the best going forward. And we hope to get involved in the future with some of your project finance or one of your other ventures going forward. So thanks a lot, Cameron.
Thanks for having me, Peter.